Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold.
Opportunity time is coming for junior miners. This is Paul Harris of Kitco Mining at the Deutsche Goldmesse in Frankfurt in Germany. Joining me to discuss this is Willem Middelkoop, Chair of the Commodity Discovery Fund. Willem, welcome to Kitco.
Good to see you again, Paul.
It's been a very long year, it seems. How has 2023 been for you?
Frustrating, very frustrating, because 21, of course, was a very bad year for investors. Even bonds were down 30-40%. And everybody expected some recovery this year, and gold price actually quite strong. But if you're an investor in the exploration space, in the discovery space, like we are, the juniors got hammered again and has been very frustrating.
Juniors have been hammered, but share prices have come down a lot, 70-80%. So now that a lot of people think, gold's around $2,000 again, a lot of people think that $2,000 is going to become a floor, not a ceiling. Gold is perhaps on the verge of a breaking out. So with low share prices of the juniors, is now a good time to be buying and cashing in?
I think we turned the corner already. If we look at what happened, this is November, late November. The first part of November, we saw a loss in the markets. Stocks were trending lower, but then the sentiment changed a bit around the 10th of November, and gold started to move higher again. And of course, we have some tax loss selling up until Christmas, but the best companies are starting to move up quite in a strong fashion. So that tells me we probably have seen the market, especially for the larger companies, and some of the juniors will bottom out around Christmas. And then I expect a very strong recovery in the last week of December and the first part of 24. Because on average, stocks jump 20-40% after the tax loss selling season. But because prices are so depressed now, we could even have a larger jump, larger recovery.
Are there any specific commodities you're focusing on at the moment? Gold, silver, copper, uranium, something else?
Yeah, battery metals and uranium. We used to be very precious metals related. It's still 50% of our fund. But the other 50% is now battery metals related, mainly lithium, copper, nickel, and uranium. Uranium is in a very strong bull market. I think it's the only commodity which has been in a very strong bull market for most of this year. And we see physical uranium priced over $80 a pound, while this was just 20 pounds a few years ago. So that's a very strong and healthy market, and that could have some legs.
Okay, I want to sort of take the conversation in a slightly different direction now. The Save Mining Canada movement has been gaining momentum a lot recently. For those that don't know, it's one of the key things that Save Mining Canada talks about is the negative impacts of short selling. They believe that it's destroying the sector. But is it as simple as that? There's a vast number of companies, 2,000 on the TSXV. Companies tend to issue a lot of very, very cheap paper to their founders when companies are formed. The exchange makes it almost impossible to extinguish unviable companies. And these all seem to be aspects that kill investor appetite as well. Let's get into this, Willem. What are your views?
Well, first, I think the most important point to understand is that Canadian junior mining markets have become very unhealthy. The way companies are being financed, the way many of the insiders are trading with insider knowledge, the regulator has a very poor track record in trying to kill these, bad practices. And it has become so common among insiders and brokers to play all kind of tricks that many of the regular retail investors really feel they almost can't win because so many insider deals are being organized. And when markets are bad, like we've seen in the last few years, you always get these calls that we should try to stop the short selling, but often these calls come at the bottom of the market. So actually I'm quite happy with this movement because it tells me we're right at the bottom of this market. And of course, all the tricks which are being played in the Canadian markets, including short selling, there should be a stronger response from the regulators. So in a way, I agree with their points, but there's much more at stake, and we need a large cleanup of financial markets in Canada. If I compare that to Europe, this wouldn't have been possible in Europe. People would go to jail in Europe.
So in terms of cleanup, you mean the regulators should have more power, more strength to actually act?
I think they have power. They have power. They have enough power, but they're not willing. They're not willing to really take action. And this reminds me of the situation in Europe in the 60s and 70s, where a lot of the people in the industry and even regulators said, well, insider trading, is not that bad. But once you don't act tough on insider trading, everybody starts to do that. And the Canadian regulators really should understand they should act now.
I must say it is quite noticeable at times that some companies have a lot of trade immediately 2 or 3 days before releasing important news, whether positive or negative. You see a massive relatively big uptick in volumes, presumably traders trading on inside information. So, Willem, as an investor in junior miners, junior exploration companies, how do you protect yourself against some of these aspects? If you make an investment in a small company, does that mean somebody in your team has to constantly monitor the billboards and see what's happening to try and get ahead of that curve or be on that curve?
Well, because of all of this, we really decided to concentrate only on the largest companies, the largest discoveries, where there's more liquidity in the market, where less games can be played because it's more about the real value creation of the company. We've had years in the past where we've done over 100 private placements in a year, and we really scaled that down to, let's say, 40 or 50, where you really start to be much more selective. But this is a problem for the Canadian junior mining industry because we were one of the few who were still investing and helping junior mining company, exploration company to get financing for their drill program. So the financing for a lot of these companies has really dried up now, and that's a problem. Yeah, that's a real big problem.
But the financings may have dried up, but the companies just don't go away. They're able to continue surviving. Zombie companies is one of the phrases used. The exchange doesn't cut them off when their market cap falls to a certain point or their liquidity falls to a certain point.
Well, that adds to all the points we discussed already. The regulators should really start to clean this industry. In Europe, it wouldn't be possible to have so many listed companies with such low market caps, and we've reached a point. We see the same in Australia, although regulators are a bit more tough there. That everybody thinks, or most. Well, let me frame it this way: many people think it's easy to make money, to list a company or to use a shell and then just play all the tricks they have seen their friends playing, and the regulators really should start to stop that process.
Okay, let's change tack again. There's been some interesting M&A deals, mergers and acquisitions recently. Deals seem to be starting to happen. great. There's some consolidation coming. But even with the premier, a lot of these deals are leaving a lot of investors underwater. So are such deals good for the health of the sector and investors?
Well, markets run in cycles, and we had the last top in the commodity cycle actually in 2008. It was the start of our fund. And now we've reached the end of a very long bear market, a very long bottoming out phase. And then it's quite normal that you see extreme low valuations, and you see even M&A activity in which companies are being bought out and investors still lose money. It has happened in our portfolio as well. So it's all a sign of the bottoming process. I think the only way is up from this kind of ridiculously low valuation. Look at SolGold. SolGold is valued less than $300 million now, and that's one of the largest copper gold discovery on planet Earth. Actually, it's the largest still in independent junior hands, and it's valued at less than 300 million. And if you compare that to the valuations in the tech industry, a company like that would have been worth billions and billions. And I keep repeating myself. I think the bottom has been reached, and the valuations will go up, need to go up, especially since we get so many shortages, developing shortages in so many metal markets.
Let's focus on copper for a moment, if I may. Interesting your comments about SolGold's valuation, and I think that's perhaps equally true of some of the other copper junior developers. But isn't part of that because actually building a copper mine today is so hard? Getting your environmental license is so hard. Getting your community license, your social license to operate is so hard. And then as and when you are building, the execution risk and the potential for cost overruns of what may be a 3 to 5 year build seems to be almost exponential now. So is it any wonder that the development projects are being, the valuations are being reduced so much?
I agree. We can explain why this has happened, why the valuations became so low. But it's still a ridiculous valuation, especially when you study the supply and demand in metals like copper. We all know, like Robert Friedland always explains, the copper price will shoot to the moon because there's not enough supply coming on stream in the next 10 to 20 years. So as an investor, we can cry and complain about this low valuation, but we can also see it as a huge opportunity. And that's what I always say during presentations. So these very extreme low valuations are once in a lifetime opportunity to invest and to take a stake in a company like SolGold, because it will need to be developed, and probably the Chinese will do it, because the Chinese, they don't care whether it's in the Congo or whether it's in Ecuador. Once they understand that this is one of the largest copper deposits worldwide, they will buy it probably pennies to the dollar and develop it. So as a commodity investor, which has been through the whole downturn since the start of our fund in 2008, fortunately we had net inflows every year. We have 100 million euro under management at the bottom of the market. So I'm very much looking forward to the bull market, which seems to be developing now and which needs to be developing now given the supply and demand in so many of the metals.
Well, one of the things I'm sort of taking from your comments, it seems that one of the things that's lacking from a lot of investors' skill sets is patience.
Yeah, and that's why it's great to be a fund manager, because as a fund manager, you're always there for the long term. You're not trading for your private book and jumping from one situation to another. So you're always looking for long-term investments. And that's why I love this industry, and that's why I love these valuations. And that also explains why we are one of the few who always have net inflows, because we're quite successful in telling this story and attracting new investors, and people see the opportunity. And I think 2-3 years from now, especially 5 years from now, we'll look back and we'll laugh about the current valuations.
Well, let's hope so.
Yeah.
So 2024, what do you see coming around the corner? What would you want to happen? What do you hope will happen?
Well, we'll want a recovery, but I really believe we'll see a very strong recovery. Why? Because markets came to such depressed levels. For many companies, you can't go lower. Also, if you compare this downturn to other downturns in the past, you really see the same indicators, also technical indicators, that this has been the low. I think the whole commodity space reached the ultimate low January 2016, when gold was trading just north of $1,000. Then we had a retest during the COVID crisis, March 2020. And now we had a triple bottom, another retest of those low valuations. And when I look ahead at 24, I expect gold to break out finally over $2,000, 2050, 2070, because gold has been making new highs in many other currencies already. And a breakout for gold in dollars is often the last one. And then that could kickstart a real strong recovery rally, not only in precious metals, but for the whole metals and mining space. So I think there's a perfect storm developing, shortages coming, geopolitical tension. We still have the inflation, the words on inflation, and very strong fundamental markets. And most important, maybe, I think central bankers, they have stopped raising rates and they might start cutting rates, and that will be very helpful.
Okay, so Willem, what would you say is a healthy investment strategy for people at the moment?
Well, I've been doing this for 20 years now, made all the mistakes, and learned time and again, and that's the only strategy left now in our company. Really focus on the tier 1, tier 2 discoveries, the real world-class discoveries. There's a very interesting situation now with Hercules Silver in Idaho. I've never seen it before in my 20 years I've been doing discovery investing, that a major came in within weeks after the publication of the first drill hole. So that tells you something. We both of us know how difficult it is to attract Barrick as an investor, because they are very selective. My tip is just concentrate on the best discoveries worldwide. And North American investors always make the mistake that they only focus on North America, while the best discoveries are being done often in Australia. And that's where 30% of our investments are.
Okay, excellent. Well, Willem, thank you very much for joining us today. And this is Paul Harris for Kitco Mining at the Deutsche Goldmesse in Frankfurt in Germany. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold.